So we could look at growth against income. That's obviously growth against dividends. We could look at sector rotations of those two types of ideas. We could look at value, which is predominantly dividend type products as well. So we've got value against growth, which is the IWM narrative. If you remember the old Merrill's line, well, that's growth against income, basically growth against value. But obviously there is a more specific narrative that we can look at, and that's looking at the growth against dividend traded products, actual dividend traded products. And what we end up with is the storyline, this storyline here. You'll see we've got IWM, IWO, GIG, and then we've got FID, NOBL, and REGL. So we've got all of these stories, which is growth divided by the dividend kings. Growth divided by the dividend kings, guys. Yes? So with growth divided by dividend kings, we can now recognize that that is a strong storyline. And that's the dividend king line. So if this line is positive, we are expecting the markets to be bullish. If this line is negative, we'd expect the markets to be bearish. Why? Because there's rotation, negative rotations in these as stocks. The other question that we had was, what is the blue line? And the blue line is our equity sentiment line, which is one of the lines we use all the way through the morning session. And it was very bullish today, very bullish today. And you can see we're absolutely killing this S&P market, guys, killing it. Not just making a good profit, guys, annihilating the market to the upside. Look at that. Equity sentiment has been massively bullish from basically these bottom edges here and here, which is where we bought into this. And now we've just seen the S&P trading up to a high price of 38.62. How much have we just made on our long trade now, guys, as a percentage? So let's now take our measure up to that price. Remember, I don't really want to be closing off my trade. And we can see that we have now traded a total of 28.8, nearly 29 times your money. 29 times your money. 58% return on your account on that buy trade, guys. Yes, there's been pockets of profit taking, but we've just done 50. Really? Seriously? Just under 60% return on your money during that drive higher. 60%. And guess where our target price was? Well, there's the bottom, there's the high, there's the halfback price, and there's your target price. There it is, right there. 38.63, and there's your baby right there, guys. Is that not pretty good? Well, anybody that says making 60% return on your account using a 2% risk is borderline average, I think you're living in a fairy tale land, guys. 60% return on your account with 2% risk from a classroom we taught yesterday using a green candle reversal for a systematic entry. 60% return on your account. Who got it? Who made 60% return on their account? Who's doing exceptionally well on that trade? I am. But who the hell else is? I'm always doing well on these trades. But who else is? Who's got the trade on? Who made 60% return on their account? 2% risk. Exactly. Hold your head in shame, right? Is that not exactly what we taught yesterday? Yes or no? Just tell me that, guys. Is that not exactly what we taught yesterday and that we said give it a try tomorrow? Yep, it's exactly what we taught yesterday. So why has nobody got it? Useless, right? Useless. You need to give yourself a shake if you want to make the monies. Honest to God, if this was a trading desk, you'd be getting dusters thrown at you. I might get them returned back with interest, but that's okay. That's the way it works. We like a good duster throwing. Right, so that's the end of equities. Let's think about how we did on our short gold trade. Well, we talked about chasing the gold market. We had that article from the overnight session. I've just seen the price going from 36 to 27s. The top line was 38 to 27, so that's over $1,000. Just over $1,000 on that short trade, guys. Pretty good. That's all right. We lost the value on the bigger macro chart narrative. We lost the value into the bottom edge. You can see here that we started to lose. The dollar was giving us a lot of confidence that we might carry on, but then we lost the real yields, and you can see that into the bottom edge. After we lose the real yields, you can see this big blue line which is drawn for you, and that would have given you an idea that that is either an exit or a buy side scalp entry. It's either an exit for your shorts or a buy side scalp entry buy. Don't see it anywhere else. Don't see it have any value anywhere else. And yep, you can see what the trade was. We were sell side only this morning, all the way through this morning. Sell side once, sell side twice, sell side 3 times, sell side 4 times if you chased it. And then down into the bottom edge, the first opportunity to buy it. Yeah, it's all right. 27s, just traded a high price of 29 halves, $250. And that is a reasonable trade, reasonable outcome. A reasonable trade, a reasonable outcome. Over on the oil desk, meanwhile, there was a spring trade sell opportunity setting up if anybody took it. There was a halfback sell first, and then there was a spring trade. The halfback trade had probably the second biggest volume since the NYMEX Open. So the halfback had the biggest volume from the NYMEX Open, and then it ran a sweep of the stops and got back in again at 99.60s. Did anybody play the short 99.50, 99.60 buy sell side trade? Anybody play at 99.50, 99.60 sell side twice? 2 trades, 2 trades. It needed 2 trades, 2 attempts. So here's the trade narrative here. You can see that the top edge here with the bottom edge here. You can see where the bottom edge is marked. That's that bottom edge there. There's your halfback trade there. Obviously, that's the halfback. And now, obviously, based on the fact that it's a halfback, we look and find that there is a 50 liquidity. This huge volume gets you selling. This huge volume gets you short into the 50. It drops back to 30. You make 20 ticks. Stops at break even. 20 ticks is a nice profit, right? And you scratch out at +1, and then it goes up to 60. Now, obviously, when it goes back up to 60 here, we're ready to do business. We're ready to trade again. We're ready to sell again. We want to be short, remember. We tell you before that the normal narrative for oil is 10 tick stop runs. And it's certainly been true recently. It's actually 10 to 20 tick stop runs. But let's see if we got a banker sell, guys. Yes or no? Did we get a banker sell at 60? Yes or no? Thank you, Sebastian. One person sees it. Okay, so we got a banker sell. You can see the red line drops, the purple line rises, the black line rises, the blue line annihilates the upside. So the banker sell comes in at 60. I don't even need a banker sell. Remember, I'm trying to sell anything. Anything that moves. And it's a bit like my dating history, anything that moves. And yeah, we sell some 60s. And we managed to get a nice little sweep back out of that 60 print. You can see we've got all the way from 60s down to that wholesale, 99 wholesale again. Nice opportunity to book some profits. And another $600 profit, guys. Another $600 on the short oil trade right there. Perfect. Absolutely perfect. Crazy good? Very crazy good. Is there going to be another sellable opportunity? Well, we're certainly very, very keen to look at it. But remember, every time you finish a trade, what should you do? Just check to see if anything's changing in the background. You'd have expected this to trade down through the 98s and 99s at least this time here. So because it's not, it's always a good idea just to give yourself an opportunity to stop a second and look at the supply demand to see if that's been changed, see if there's anything that you're missing, check it out, check out the RBOB markets to see if that's still relatively bearish, which it is, check it out, check out the dollar market to see if we're losing some value in that, which we are. So that explains why we're not getting through the $99, correct? That explains why we're not getting through the $99. So we can understand this better when we simply go through that process, can't we? What was the chances of us getting through $99 when the dollar is weakening as much as this? Very slim, right? Very slim. So we know that we book profits. We know we close off our positions. You know that we wait for another opportunity. And the next opportunity just presented. So we get back up into the top edge. We see that we take out the level 2 liquidity, which is right there. You see we take it out to the pin. Obviously that's very, very aggressive, but you can see that there was another sellable opportunity right there. And you take another punt. Now, why would you take a punt on that one? Well, if the euro dollar was the reason why we rallied, we want to make sure that the euro dollar is reversing so that we can get involved in that as a sell trade. Well, it's reversing, but it's reversing very, very small. Very small. Based on the reversal with that very small liquidity there, you can see that we weren't expecting much from the sell-off, and we didn't get much from the sell-off. We went from a 60 price down to a 40 price for $200. But remember, we want to be short the marketplace. We've just looked at the supply demand, so we want to keep working sell side. So we get another pop to the upside. The euro dollar, this time on the right hand edge of the chart, the euro dollar is a lot better divergence this time. Yeah. The euro dollar is a lot better divergence when we look at the supply demand lines and we try and answer the question about whether we had a banker opportunity to sell in this. The blue line's rising, the black line's falling, the purple line's falling. So yeah, we've got a sell. It's not a banker sell. It's not a banker sell, but we don't need a banker sell. We'd prefer to see it, but it's not a banker sell. It's still worth taking a pop at some sell side. We've just got a level 2 liquidity. It's just rejected that level 2, and we're going to try it all over again. Supply-sided business. Selling the market, supply-sided business. And the sell, again, seems to be coming into a capper price around about this 40 level. And obviously, if we can scale that 40 sell side, obviously it should be time to mark down the price. And obviously, you know where the target price is. If it's 40 bottom edge and it's around 70 top edge, then of course you're looking at a 30-point move. You're looking around about $99.10 for your target price here. $99.10 for your target price, yeah? And there we go. Off we go towards that target price. Now, there was a seller came in at the halfback. See that? There was a seller came in at the halfback, so they will be taking profits at this price here, which is 21s. So you make sure you pay attention to the fact that there was a seller at the halfback. Because there's a seller there, you know that you're going to take a little bit of money if you're a multi-lot trader at 99.20. 99.20. There we go. Target price has been reached. You're going to take a little bit of money at 99.20. We've just caused the price to bounce a little bit there because we took profits. The market maker got a little bit of a panic when we took some profits there. And they've just pulled their liquidity to pull the price back up again, just so that they stop anybody else taking profits. We were first to the punch. We got her some money out of the trade, and the market maker pulled away a wee bit of liquidity to stop anybody else taking any buys at that stage. Now we're trading down towards our other target price here, and there we go. We've just reached target price again, and again we see a nice little bit of an opportunity to book some more profits. There we go. Nice trade. 99.10s, and now we're obviously looking to get through the bottom edges. Now, what's the target for the bottom edge? Well, we need to see that euro weakening a little bit more than it is. The euro needs to give us a little bit more incentive. So we need to see that line coming down a little bit more, a little bit of dollar strength, and that should be good enough to send the oil price scurrying through the bottom edges. But at the moment, we have this value divergence. We've got this buy-side order block that came from over here. It's going to be a tough ask unless we really see some short-term value changing. So what kind of short-term value changing are we looking for? You want to see that blue line going back hard to the upside. And if that happens, we're going to squeeze all the way through the 99 evens, and we should easily hit 98.5 without any troubles at all. We're ready for the squeeze. We're watching for it. We're ready to deal. Now we've got a little spring opportunity because we've now got this little cap price here. We're obviously aware of that, 99.20s. So we're aware that there could be a little spring trade here. As this goes, I'm ready for the squeeze. I'm getting ready to take advantage of the break lower. But I'd rather sell on the uptick, and the reason for that is because we have made a lower low in the blue line, so I should have made a higher high on oil. So I don't want to get too involved in selling just before she goes. I want to sell into the uptick. I want to take advantage of that uptick if the value develops. At the moment, the value is developing, so I'm going to be watching for a possible book change. I'm watching for a liquidity change. I'm watching for a transition so that we can get back into that bit of business again and see if we can get a sell back off that 20 print. We have just got a sell off the 20. It's came down to 5s, 4s, 3s, 2s. There we go, guys. Selling off the 20. And we've just killed it there again, guys. There it is. Did everybody get the trade on? The blue line started to rise. The black line started to flatten out. The purple line was dropping. I don't need a banker sell. So we sold off the 20s. I got an average price, nowhere near 20 to be honest. I got an average price of 15 on that sell trade, guys. I got an average price of 15 on that sell. So my average price was here. So an average price of 15. We've just traded 90. We've just made another $250 profit per contract. And that's not a bad little trade, is it? That's not a little bad bit of business there. Nice take, guys.